Hey guys, good morning. I'm coming to you from West Texas, actually New Mexico. A little bit about me. I've been day trading for 6 years straight. I've been in the markets for about over 15 to 17 years. Started trading cannabis and decided that it wasn't really working. And I ran into option trading. And from there, I became an options trader full time, and I've been doing it every day for 6 years. So, good morning. My name is Eric B. A little bit about me. I basically, grew up as a kid, middle class family, switched schools a lot, joined the military at 17, did 8 years active duty, one National Guard, four deployments. I was a bodyguard in Iraq in 2004. Got out, got my criminal justice degree, bachelor's at UT Arlington, graduated 2011. And from there, I was actually a geologist. As you can see, what I'm doing now, I've been doing it for 15 years. Been with five companies, well diversified in everything I do as far as geology. That is basically me in a nutshell. So, the thing about day trading, I love it. I wouldn't want to do anything else. I love sitting at the comfort of what you can see the office here or my own house. Nobody to report to, do my own thing. Basically, you have to separate logic from emotions it comes to day trading, and it's very difficult. I mean, a lot of days we're a human being at the end of the day, and a lot of days that's what we do. We get emotional, and you got to learn how to separate emotions from logic, and that's exactly what the markets are about. It's a lot of algos trading, and it's very, very manipulated. You will see candles jump up and down like no tomorrow. Um, just when you thought you've seen it all, you have not. Look at what happened on Friday, a couple days ago. Look what happened last week. You see it every single day. And what happens is it takes a very special psychosis to be able to distinguish between algos and institutional trading. So, with having said that, I'm going to show you some things that will help you out tremendously. I'm a very analytical, my brain works very analytical, if you will. And I basically watch like a hawk. And this is how I've learned every single day for 6 years. I've seen markets do some crazy things, as you have as well. Now, having said that, I know everybody has their unique trading style. I'm not here to tell you how to trade, or I'm just going to give you some different ideas on what you can do to basically diversify your portfolio and your trading style. And again, psychologically, this will help you. Um, if you snooze, you lose, as the common saying goes. Okay. So without any further ado, I'm gonna get into it. I'm gonna talk to you about supply demand zones. I'm gonna talk to you about pitchforks. I'm going to talk to you about different candle formations, okay, and what they mean. There's going to be a couple other things, but I'm going to kind of not necessarily in that order, but you'll see as a result of the end that you will have the education of supply demand zones, the education of pitchforks, possibly an AI program, third party that I purchase. I bring in every day, I try to when I can, is the upper and the lower. I'm going to show that to you. I'm going to show you everything how it works in conjunction with one another. Okay. You can't have one without the other. Normally, it doesn't work that way. Now, I want to say I have nothing but the utmost respect for Stephanie. I've been following her for quite some time. She knows who I am. I actually read her book, the one that she rolled out a couple years ago. I read it in one weekend. That's how hungry I was. I wanted to know what she knew. Okay. And I'm still learning. We never stop learning. It's all about education. And I want to just personally thank each and every one of you for, commenting in the chat room and teaching each other, because that's what we're here to do. Nobody is better man or woman to the right or left of them. We're all here to learn together. And with everybody's help, we can get ahead. Okay. So I'm going to share my screen. And first I'm going to get into is supply demand zones. Okay. So here we have a chart of SPY. What I typically like to use, and again, everybody's got their own unique trading style. So on the left here, I like to use E minis, and you will see a lot of lines on this chart, and I'll briefly talk about some of them, and I'll go further in depth on others. Okay, a lot of these are algos, and again, everybody has their own. So again, you got to find out psychologically what works for you as a trader. Okay, what may work for me may not work for you. Okay. And vice versa. What works for you may not work for me. So you have to kind of find your own niche, right? And I have found mine. So again, without further ado, I'm gonna jump right into it. So here again, E-minis, I've got some algos. I use the tick line on the bottom left. Here I use a 1 day, 1 year chart. As you can see, volume profile and a few algos. Okay, these are basically moving averages. What I like to use is what Stephanie also has brought up in the chat room multiple times. This is a 21-day moving average. Okay, I'll just go to studies for simplicity and show you. So I like to use the 21, the 50, the 200, the 250, and 400. Okay, and also I have the 150, which I like to keep everything in order. So that way, if I'm ever like in crunch time, I can kind of see, okay, I have this, I don't have that, so forth. So if you start practicing this now, you're only as good as your last trade. So if you start setting up your charts correctly and in a specific order, your mind subconsciously will automatically be trained to see this. Okay. But again, those moving averages, the 4 and the 8, okay, and then the rest are basically algos. You got VWAP, you've got shoot, I've got so much in here. I've got actual and some of the stuff is free on the web, which you can go find it. Okay, they are think script codes on Thinkorswim. I've got a TI Smart Earnings. I've got this is VIX futures. It only pops up if I put in VIX. Um, let's see, volume profile is a big one. Here I have implied volatility and realized volatility. I used implied volatility on top, and I use a 10-day and a 20-day historical volatility, same as realized, okay? So I can kind of see what's going on a daily chart. Also, all these are algos, okay? And these are algos that I have purchased, and you know, um, that's something you can get on your own. It's just certain people that you run into and you purchase them and you have them, okay? And then there's a few that I've actually had coded for me, okay, by very, very smart people. So some of them I own, some of them I do not. RSI MACD, okay. One thing I've learned about RSI is it's better to have, most people go with 70 and 30. I like to go with 80 and 20 because a lot of times it hits 80 and it bounces down. Now, granted, it will go above 70 and be overbought, and it will stop at 80. Sometimes they go to 85, 86, but a real good rule of thumb is 80 and 20. Now, if you want to stick with 70 and 30, again, this is your own psychosis. You got to do what works for you as a trader. Okay. So that's the 1 year, 1 day chart. You can see right here, you see how implied volatility is coming above realized. That means there's a lot of volatility. It can go up or down, but obviously as volatility goes up, option prices increase. Okay. Now over here on the intraday chart, I have the same stuff over here, but they're EMAs, as exponential moving averages. They move a lot faster than simple moving averages. Again, it's algo driven. I'm going to go to my studies and show you basically what I got. A bunch of algos. Same thing applies as the 1 year, 1 day chart. I got VWAP. I've got multiple times VWAP, 2 day, 3 day, 5 day, and 10 day. Okay, all on one chart. I have the 10 day, the 15, and the 30. Super, super important. I was actually told this by a couple of institutional traders. This is what they trade off of. So the 10, 15, and 30, sometimes it'll go above 10, it's bullish, and it hit the 15 and come down. Okay. Usually when the 10 crosses the 30 to the upside, you're bullish. Same holds true when it crosses to the downside, you're bearish. Okay. The 15 is the midpoint. I have prior day's close. I have a live tick. Basically, it shows you where it's trading. I have the EMAs at 50, 200, 250, and also 4 and 8. It's here somewhere. I've got the pivot boss. I've got person pivots. The VOLD, VOLD, you can get that free off the internet. It's for Thinkorswim, ThinkScript code. Again, I've done a lot of research on the weekends. I watch videos. I still continuously program my mind. I want to stay sharp. I want to learn as much as I can. Okay. Um, the VOLD is actually these three black lines on the intraday chart. Okay. It's basically the ratios of SPY and the NASDAQ and the Dow Jones. Okay. And I'll get to that in a little bit, but just want to go over this to close up to show you what it is that I use. Again, implied volatility, historical, 10 and 20-day realized. And then down here, same thing. RSI 80 and 20, MACD. Okay. That's basically it, guys. So now that I've gone over briefly what kind of lines I use, I'm going to get into supply and demand zones. Okay. And this video should be about 15, 20 minutes. I don't want to take too much of your time, but I just want to get straight to the point and show you how this really works. So this was on Friday of the SPY. Okay. Now, granted, I have AI. I bring in the AI. I have volume profile. When you wake up in the mornings, it will look something like this, right? The shaded region is pre-market. So what I do is I plot my AI lines in orange. Okay. So if AI is telling me SPY is, let's say, down here. Okay. Now this purple line is person pivots. The red lines are the, I believe, Camarillo, what was Stephanie has brought in. And these other green lines right here are the part of person pivots. So you'll see that they are as such. Actually, this one's ATR, average true range. Okay. There's your Camarillo. This line right here is your person pivots. The blue line is your bottom Camarillo. So if you see the blue lines on here, it's upper and lower Camarillo. Okay. So let's get into supply and demand zones. Like I said, you'll see your chart like this. And whenever again, talking about AI, if it shows me a lower line AI, I always put that in orange. So let's say AI is going to come here. I edit properties, come down here, turn it to orange. No problem, right? Save as default. All right. Then I go up here. AI is telling me SPY can get up to, let's say right here. Okay. Now, when I get Stephanie's pivots, I draw them in purple. So she'll say bullish above, bullish below. So let's say, for example, these lines she picks here. I will paint these a dotted purple, okay? And then let's say I have one here as well. Edit properties, I'm just going to hit save as default. Let's draw a couple lines in here just for example. Okay, let's say the lower is right here. Let's say one's right here, okay? So when I look at these charts in the mornings, supply demand zones, I'm basically what you're looking at is 3 red candles before the green, or you want 3 green candles before the red. So in this example, you want to draw it as such. Here's the line. I draw a lower line. Okay. Don't matter about the line, the color. Don't worry about that. I right click, add drawing, and I draw me a rectangle. Going up to the wick of that green candle. See that? Boom. Okay. If you want to change the color, you go to edit properties. You can make it whatever you want, save as default, whatever is your preference. So when I got that drawn, I come here and I activate drawing and I bring it all the way to where the market closes, okay? And I actually do this for higher and lower, okay? So let's go to the lower. It's trading right here, pre-market, and it opens up and we get our lower line right here. Okay. You see that big green candle? That's a supply. Okay. Or demand. You call it whatever you want. But this red candle is what I'm paying attention to. I take it from the wick, add drawing, and I take it to the wick of that. Okay. There's my supply demand. That is the lower, that is the upper. What happens in trading is during the daytime, it will follow a pattern, usually a candlestick pattern. Okay. I like to use 5 minute candles. 1 minute candles confuse me too much. There's too much emotion. So I use 5 minute. You notice that this right here, you notice where it's trading. If I bring this over, look at this. It did not go above the upper limit of supply or demand. Okay. So you see that? There you go. And supply demand zones can work on all time frames. Again, this is intraday 5 minute. If I come over here, I can do the same thing on a 1 year, 1 day chart. Now, you don't want to confuse the masses. You don't want to do too much where you're like getting totally confused. But I have a very trained gunner's eye. Okay. So in the military, I was a Bradley gunner for 3 years. I can see things before they happen. And you can too. You don't have to be military to see that. I'm just making a point that you have to see these things develop. Okay. So here we go. You can see on this chart, you can draw supply demand zones. And normally when I do that, I do them in pink, and over here I do them in white. That way, if they show up over here, they're pink, and I know it's from my 1 year, 1 day chart. Okay. So in this example, okay, you can do it from this red line. All right, we have some consolidation, it's going down, and you look for support and resistance. So I can basically say, well, right here's a good start. So I can add a drawing all the way to this top wick, top candle. Okay. And again, remember, I'm taking this from that one particular red candle, this one. Okay. Edit properties. I can turn that to pink or whatever color you're choosing. All right. Now, you see how confusing that looks? So you may not want to do that because, again, I have an upper supply demand zone on the 1 year, 1 day in pink, and then I got my intraday in white. Okay. You don't necessarily have to do that, but I just wanted to show you. It is one tool that you can use. Okay. So supply demand zones, it's how they work. They go up and down, they bounce off of them. If you happen to hit a supply and demand zone and it comes up and it goes past this line right here, chances are we're going higher. Okay. So in a nutshell, that's all there is to it, supply and demand zones. Very easy to use. I use them all the time along with all my targets. Okay. And when you're trading, you want basically the way I trade is I look at everything. If I go over here on a flexible grid chart, I have basically intraday here in the middle, and then I use VIX and UVixen. Okay, a lot of y'all are familiar with that. And I can kind of just prognose what is happening before it happens. A lot of times. I have no crystal ball, but like I said, you can kind of get an idea. If UVixen's going up, chances are the VIX will follow soon after. Okay. So this is my chart setup. This is what I use. That's supply demand zones. Now, briefly, let me get into pitchforks. Okay. So you can do pitchforks for anything. You can do an intraday chart. You can do any time frame. It doesn't matter. Let me clear drawing set. Real 1 second. Okay. Now, I like to use pitchforks personally on a 1 year, 1 day chart. I don't typically do it because it's too confusing on intraday, but you can. But let me show you how a pitchfork works. So I'm gonna basically bring this over. Okay. And I'm gonna look at this whole thing right here. All right, here we go. So the thing about pitchforks is, and you can do the research on the web. I mean, they basically show you upper, lower supply demand. I mean, it's a lot of different variables, but The point being is at least you know the high, the low, and the midline. Okay. So if you want to draw a pitchfork going up this way, you want to go from low, high, low. Let me say that again. If you want a pitchfork to go up, you want to go low, high, low. Let me show you. So in this example, I'm going low here. Okay. At drawing pitchfork. I'm going to the high right here. I take it from the wick and then I bring it down to the low. Okay. Which would be right here. Now, there's your pitchfork. You see how that don't line up? So what you can do is you can edit properties, go to shift. You see that? Now it's following this trend right now. You see how it hit the lower and came up? Right here, it hit the midline. There you go. Okay, you can do this for any stock, any time frame. But again, I would strongly recommend doing it on a 1 year, 1 day chart. All right. So this is where SPY's at right now. And this is where it's trading. Where's it going to go from here? Nobody knows. We can look at the whole picture and see that basically any chart patterns looks like it hasn't formed a head and shoulders yet. It very likely could, or it could be bull flagging. Okay. So again, it's going to take some research on your guys' own time to really like get this down to a T. Okay. But in essence, this is how you do a pitchfork. If I wanted to do a pitchfork going down, let me hit Control Z. Okay. If you make a mistake, you can always hit Control Z. It will bring it back. It happens all the time. So if I do a lower pitchfork, I want to go high, low, high. Okay. So in this example, let me put the other pitchfork back up just to show you something. Real quick, because I want you to be able to differentiate. Pitchfork to the wick, to the low. Let's put the shift back on. Okay. Now, I'm going to do a lower one. Remember when I said high, low, high? So if you want it to go low, you want two highs. If you want it to go up, you want two lows. So if we want to go down, again, we want two highs. So we're going to take high. This one hasn't formed yet. You actually want the high right here, but we're going to take, for the sake of argument, just for teaching lessons, this one. So let's look at a bigger chart. Okay, here we go. All right, we know where we're at. So let's take this high. This high right here is going to work better. Add drawing, pitchfork to the low, right here to the wick, and right here where I put the other one, right? So we have two different things that could happen. It's going to go up like this, or it's going to come down, right? And use this pitchfork. Now the same holds true. You can edit properties. You can go to shift. You see how that comes up with the shift? That's on a lower pitchfork. On a higher pitchfork, the shift will come down. Okay. So if you have two different pitchforks, what you can do is you can just go to edit properties and change the lines. Set colors for all curves. I can do whatever I want just to know what I'm looking at, right? So here, when I go to the intraday chart, right, you will see your pitchfork lines. Okay. And like I said, you don't want to complicate too much. Okay. You don't see them yet, but you will. There's the midline. Okay. And that's for the upper pitchfork. All right. So in essence, that is how you do pitchforks. Okay. And you can take this on any time frame. Okay. Let's clear drawing set. Let's change it to a 3 week, 3 or 1 week. Okay. So if I wanted to take the whole thing, the whole pitchfork, what I normally do is I draw a line right here for my lower support. The high, we can take this high right here, okay? And we can take that low. All right, so You don't necessarily need the lines, but sometimes it helps you, and you're going to see why here in a second. So if I add pitchfork, take it to this high and this low, look what we got. That is basically going back 3 years. Okay. What is it doing? Well, let's see what let's get a little closer look. Look at that. Beautiful. Okay. Now, if I was to change this to a shift, look at that. That doesn't hold true. That doesn't make any sense. So let's go back to a standard. Okay. So there you go. All right. So when you're on your 1 year, 1 day chart, a good rule of thumb with pitchforks is to use upper, lower supply and resistance. So we can do this on a 3 year, 1 day chart, 3 year, 1 week chart, 3 year, 1 month chart, doesn't matter. Okay. For sake of teaching, I am going to change this to a 1 year, 1 day. And then support and resistance. Let's see what this looks like right here. Okay, sometimes you got to zoom in. Where does it line up with anything? Right here. Yep, that's a good one. Okay, so you can do this. You want to look at the big picture and zoom in, zoom out, and draw support and resistance. Okay, and my support and resistance, I typically like to use yellow. You can use any colors of your choosing. Okay, I do that on a 1 year, 1 day chart. Okay. So basically, in a nutshell, that's supply demand, and that is pitchforks. Now, as this thing trades, again, I can't, you know, talk about it enough. You got to have a very special mindset to do this, okay? And to see where it's trading as it goes. Remember, I showed you orange is AI, purple is the dark pools. Um, The dotted purple is actually targets, and the straight purple is Camarillos. Okay. And then, of course, person pivots is on here, the pivot boss. These white lines are standard deviation, positive 1, 2, 3, negative 1, 2, 3. Okay. So when this thing is trading, I'm looking at everything as a big picture, standard deviation, moving averages, supply demand, pitchforks if I have them. Anything and everything. Okay. And that is how you can kind of paint in your mind a picture of what it's doing. Okay. And other than that, I'm going to show you a couple other things. Hopefully by now you're catching on a little bit, like you're actually understanding a little bit more about what I do and my personal trading style. Okay. But I want to show you measured moves real quick. Okay. As these things trade, you want to look for different things, ascending, descending triangles. Okay. If y'all want to screenshot these, I'll leave it up for a second, screenshot it, because this will help you out tremendously. This is basically the measured move. You have your triangle, and then when it breaks that resistance or support, okay, there's your measured move. Okay. It may not get there right away, but look at that. Sure enough, right here. All right. Now, the same holds true for this one. You got support resistance. You got your measured move, right? There you go. There's your measured move right there. Okay. So you kind of get seeing the picture. I actually do this during the daytime. Sometimes if I see it and I spot it, I will draw it as it trades. Okay. Here's another one. Bull bear flag. There's your flagpole. Okay. Measured move. There's your pole. There's your pole. There's your move. Okay. And as this thing trades up, it's going to trade to right here. It can either overshoot or undershoot. Keep that in mind, okay? Please use risk mitigation. Bull bear pennant, okay? Same thing holds true. Got your pennant, okay? Measure move. There you go. Boom. Okay. Cup and handle. Same thing. You got your cup. You got the low. Okay. Your move. Your move's over here, but this is where you're the measurement you're taking. you got your handle, and so forth. Now, granted, you can have an inverted cup and handle, so if you reverse it, this will be on top as such, like this, and then your cup will be inverted, okay? So same thing. You got a double top, double bottom, okay? Kind of like a W formation, right? Kardashian bottom. All right, it can be this way, a double bottom, or it could be a double top. It's just flipped, okay? So you take your measured move, which is right here. All right. Falling wedge, rising wedge. Same thing holds true. It's falling. You got the measured move. Okay, the measured move's over right here, but you take it and you bring it over here when it breaks out, okay? See where it went? All right. Plus or minus. Remember, plus or minus. Head and shoulders. One of my favorite to trade. You got to wait till it develops. Okay. You got the left shoulder, the right shoulder, the head. Okay. See the trend line? You see the measured move? Boom. Okay. And that's all I want to show you on the chart patterns. There is one last thing I want to get into, and these are basically some market breadth conditions. You can get this on Thinkorswim as ThinkScript codes. They are free. Okay. You just have to do some research. You got trend, reversal, range, low, high volatility, neutral, bullish, bearish. Okay. Don't worry about so much about these, but definitely range, reversal, trend days. Okay. Um, Here's a hierarchy of a tick, advanced decline bold ratio. So basically, the first thing I look for, I watch the tick as I do on here. Okay. It's good to draw your lines 500 and negative 500. That's usually where it trades in between. Anytime it goes above that, we got some serious buying or selling. Okay. And I got my lines at 1,000 and 1,000. It's a good, very good threshold to use. So let me go back to this, and I'll get into more of this in a second. Three major market internals. You got bold ratio, advanced decline line, and tick. Okay. First thing you want to watch is a tick, your advanced decline line, and your bold ratio, meaning the ratio of the Dow Jones, New York Stock Exchange, or the SPY. Okay. It could be 1 to 1, it could be 3 to 1. Normally, if we got a bullish or a bearish sentiment, it can go 3 to 1, like plus or minus. Okay. Positive 3 to 1 or negative 3 to 1. All right. Um, Here's the different things that can happen. You got a breadth extreme. And again, screenshot these if you'd like. I really want you to see this. And a lot of people aren't even going to use this. I get it. But I just, this kind of gives you an idea of where the market could be headed. Okay. So on this breadth extreme, it's a gap and go. All three give extreme readings right off the bat. Now, when I say all three, I'm talking advanced decline line. It pins to 2K or above, or vice versa, okay, until the close. So basically, we'll get above 2K or below 2K and stay in that range until the close. Tick staying above zero all day or vice versa, okay? The cumulative tick histogram is what I use. It's steady above zero or going up and down, okay? And this example, it's just talking about an extreme. But in this example, we're talking about a reversion, okay? So on a reversion, you can have a gap down. Sometimes it will close the gap from the previous day. Okay. All three give extreme readings of open up bearish. All right. Advanced decline. Then it'll be either above zero or below zero. Okay. As right here, advanced decline line, it will pin to -2 and will go to zero very quickly. And then quickly, it is steadily grew through the day. Okay. The tick staying below zero all day, because you got to remember, you got tick and you got cumulative tick, advanced decline, and fold. Okay. The tick staying below zero all day, cumulative tick histogram steady below zero or going down. Don't rely only on the fold histogram. Again, going back to this, you want to watch tick first, advanced decline, and fold. Okay. In that order. All right. So back to this one. Don't rely on the Volt histogram. Can go from negative to positive. Do not short the market. Not a great day-to-day trade, okay? It's not. It's very choppy. Here is a breadth crescendo. A lot of trend days happen this way. You can have maybe a small gap up or down. The Volt and AD will climb up all day slowly and see it midday, okay? You'll see what's happening midday, basically, is what that's saying. The tick will hold above zero, and cumulative tick will climb all day. Same thing applies, okay? It's a great day to trade. A biased range day, you will get chopped up. It's very biased. Messy, tricky day, gap down, negative ADD line, and bold. Tick and cumulative tick is above or below zero. Tick can spike to support resistance and trade accordingly on spikes. You will, I repeat, will get chopped up. So this is why, again, I watch these charts, okay, on the Qs, okay? I use advanced decline, cumulative tick for only for the Qs. Now, granted, the VOD, the VOLD, you can use that for any stock, but the VOD, the VOLD, ADD, and cumulative tick, again, I can't stress it enough, I use for the Qs. Okay. Breadth divergence. You gap down, Volt histogram positive, AD line reverts from negative to zero. Okay, on a gap up, it's just the opposite. Okay, the Volt histogram is negative, advanced decline line reverts from positive to zero. Okay, could close the gap, not a trend day. May to, oh, that's a misprint, but May to 2-day VWAP. It may go to, that's supposed to be a G. I fat fingered it. I'll change it. It may go to a 2-day VWAP. Okay. Breadth neutral, most common. Everything is neutral. Tick is above, below zero. AD line sucks back to zero, pins to zero. Tick is between -5 and 500. Doesn't mean we can't go up or down. It's very balanced. It closes somewhere in the middle, so we're neutral. The trifecta is one of the best days to trade. Everything lines up, trends higher or lower based on these three elements. Tick above or below zero, AD line above or below 2K, Volt histogram steadily climbing or descending. One of the best days to trade. Okay, now this is the chart I use. Okay, I have the Qs, I have all my algos, I have the volume, I have my historical realized volatility along with IV. I have a couple of algos. I have, this is the RSI on 80/20, MACD, and I have my ADD line, right? It's not a line, it's more of a histogram, a bar chart. And, oh, right here, sorry. Here's the histogram. This right here is your current up or down volume, which is based off zero, okay? So if you see -0, it will show orange. Let me go to a 5-day, 5-minute chart, and you'll be able to see that. Here we go. Let me zoom in. So on this day, we had negative volume. Okay, it just shows orange, not blue, not a big deal. Okay. So here we go. And then your histogram right here. Let me actually auto it. So yeah, you just got to get, I don't really have a whole lot of time to go to each specific scenario, but at least you know what to watch. The Volt ratio right here. You got your histogram. Okay, I don't like a line chart. I like a histogram. I like to see what it's actually doing. Below zero. Okay. Up to 2000. Anything above 2000, you're very bullish. Anything below 2000, we're bearish. Okay. And then, yeah, so I mean, you kind of getting the gist of it. You got to play around with it. But again, I just wanted to say that you can find these free on the web. Okay. All these are ThinkScript codes that I have researched and I have found them and I've read into them and I understand what it's actually trying to say. Okay. So again, these are the different market breadth conditions. Okay. I just wanted to say I have the utmost respect for Stephanie, everybody in the chat room. I appreciate everybody allowing me to show you what my charts look like. I'm hoping that this helped you in any way, shape, or form. Again, you got to see these things as they're happening. Draw your supply and demand zones. Do your levels. Okay. Um, I didn't go too much over what all these lines meant, but it's all the algos and everything that I use. And again, your charts will look differently, right? So, without further ado, I am going to close this thing down. And I really hope that y'all got something out of this. I hope to see you in the room. And quite frankly, let's trade together. Let's help one another. Hopefully you found something in this video. Okay. Uh, that will help you along the way. All right. And if you have any questions, I'll be in the room from time to time. I work in the oil field. I'm out here a lot. When I'm at home, I can concentrate more on the room. I'm in and out all the time when I'm at work. So ask any questions. There's no dumb question out there. We come from different backgrounds. A lot of us are very advanced day traders or traders for that matter. Some of us are rookies and we got to learn. So I appreciate the time and effort, and I'll see you in the room. Bye now.